What is going on, everybody? It's JT here with JT Invests in You. And as most of you can tell, the markets kind of suck right now. Everything is red. I'm not sure of any token out there that isn't in the red. If you know of one, please let me know. I'd love to I'd love to know which tokens are doing well right now. But that being said, yeah, there's a lot to talk about. There's a lot going on in the broader equities market. You know, the S&P 500 looks like it's about to tank. There's a lot going on. We can track the 10-year Treasury bond yields and how that correlates to Bitcoin prices. And yeah, we can start with some charts. If you have any charts that you want me to look at, let me know in the comments, and I will get to those. Yes, hence the red lights for sure. I even have a red light. I even have a red light on my microphone. Red everywhere. The last stream I did with green lights in hopes to make the market green, but it didn't work. So I'm just, I guess I'm just a follower now and going all red. But that being said, let's just jump right into it. So here we have the total crypto market cap. And as you can see, the total crypto market cap is down, let's see, 47% from its highs. It's definitely not looking too great, but on the daily, the RSI is just as oversold as it was during that first big sell-off back in May of 2021. So if that's any indication, it could be a great buying opportunity. However, if you zoom out just a little bit and go back to the 1 week, it still could come down a little bit more. You have the MACD up here that's still relatively high. You usually like to buy the buy it when the MACD is around 30 or below, and it's still, over 100 in some spots, which is pretty ridiculous. And the MACD, for those that don't know, is just a moving average convergence divergence. Essentially, it's just a fancy way of tracking momentum and the shifts in the momentum. Yes, DeFi is still green. Which is amazing, honestly. I mean, I have barely any money in it aside from my pre-sale money, which is a decent chunk. But, unfortunately, the market could be horrendous by the time I get those pre-sale tokens. So here's to hoping that it's still green by the time I get that first unlock. But as you can see here, I have a couple different support lines here. We've got this blue one right here, which is at the 100-week moving average. We've got this green one right here, which is at the 50-week moving average. Let me just delete this. This is probably getting to be a little annoying. Zoom in a little bit. Boom. This light blue line is at the 200-week moving average, and this red line is at the 300-week moving average. I'm going to change this to a logarithm. Oh, never mind. Whoop. Sorry about that, technical difficulties right now. Whoop. What do we got in the chats? Thanks for doing this. Total crypto market cap is an interesting number. Let's see. What else? Sorry. Total is an interesting number, but I always remember that there are so many silly, useless, and meme projects included in that number. Yeah, and you know what else is included in that number? About $170 billion worth of stablecoins. So yeah, there's some issues with the number, but it's certainly still a good chart to look at right here for sure. And as you can see, the last couple times that the total crypto market cap took a tumble and broke its 50-week moving average, which we recently just broke, it landed on either the 300-week moving average right here in red or the 200-week moving average right here in blue. And both of those numbers are currently at about $700 billion and $500 billion, which is insane. Could you imagine if we come down, which we totally could? The $700 billion, not only is it the 200-week moving average, but it's also the strong support over here where we topped out in 2018, which, it totally could be where we bounce. I don't think we're in for that yet, but if we were, could you imagine going from a $2+ trillion market to a $700 billion market with presumably still $150 billion worth of stable coins? It'd be kind of insane. Let's see. Let's look at the Bitcoin market. Let's see. Bitcoin. Let's see. I've got a bunch of things drawn here. Sorry about that. These, if anyone wants to know, these white vertical lines are the Bitcoin halving. So the next one is coming up around May 5th of 2024. This green line right here, this green vertical line, is where I predicted, based on the halvings, would be the best buying opportunity, which is about middle of November. And I predicted that just based on averages of the bottoms before the halvings. It wasn't just like a wild prediction shot in the dark. That being said, if Bitcoin is in a bear market, I would expect it to just slowly bleed out until this like November mark, where it lands, probably at that point, this 300 moving average would have moved up to about this point right here. And I could see Bitcoin around 20,000 if we're in a bear market. I could see Bitcoin around 20,000 between September and November. However, one of the ways that we could stave off a bear market is if we bounce strongly off this 100-week moving average, which is at about 32,000. We had a little wick down to 34.5, so we got pretty darn close. But if we can bounce and stay in this wedge, these diagonal green lines right here, if we can bounce and stay in this wedge, then we could see more highs. However, I do think that bear market would be kind of insane, because I do think we're going to see a bear market before the next halving. And if it's not now and we continue to see new highs, then that next bear market will be very hard and quick, maybe like a 75% drop in like a week, as opposed to this slow bleed. I mean, that could be better. Some people might like it, would rather that, honestly, because months and months of this bleed out, kind of, people get sick of it and eventually capitulate. If it was just a week or two, kind of like we had back here when we had that COVID scare, where, we peaked in late February, dipped down in early March, and we're right back up to where we were in late February by late April. That was a very, very quick dip. So if we had something similar to that, that would be amazing. But let's go take a look. What are the chats saying? Hi, so if you have Algo and want to use it to buy more, how can you do that? If you have Algo and want to use it to buy more Algo, yeah, it does seem like AlgoFi would be your best bet, because I don't know of any other ways. So essentially with AlgoFi, what you could do is supply your Algorand as collateral, and then borrow against it. So you could go borrow their stable coin, the STBL native stable coin for AlgoFi, or you could borrow USDC and then bring that over to Tinyman and purchase more Algorand. Now, this is a leveraged position because you're buying on borrowed money. However, you could do that. You could supply the Algorand as collateral, purchase, borrow a stable coin, purchase more Algorand, and then if you really wanted to leverage up the position, which I don't really advise, you could resupply that Algorand you just bought as more collateral, continue to borrow against it, and have this never-ending cycle where you could leverage up your Algorand position quite a few times before you're kind of capped out. Like I said, I don't necessarily advise doing that, because you can essentially make it so you're 8x, 10x leveraged by just continuing that circle. And yes, Padre Algo. Let's see. Stable does have. Clicked on the wrong one. Stable does have a better, a lower interest rate for borrowing, and it also has a pretty good interest rate for staking. I believe the staking interest rate is like 3 or 4% for your rewards for staking it, and you can also get like 36% right now by providing liquidity to the stable and USDC pair, and then staking those liquidity pool tokens on AlgoFi, which is pretty sweet. I definitely advise doing that. I am doing that currently, and it's a great way to grow your cash position during these red days. It's great to have a cash position for those that don't. Next time we're in the greens, next time we're in a green market, definitely shave a little bit off and have 5-10% of your position as cash, because you'll absolutely come to thank yourself in the future when days like today come and your cash position just went from 5 to 10% of your portfolio to like 20% of your portfolio because everything else had come down, and now you can use that to buy all these assets cheap and bring that back down to 5-10% and buy the dip. It's certainly a great strategy. For those that don't partake in that strategy, I certainly suggest doing it. It took me a couple of years to get into that strategy. I used to just be a fully invested individual all the time. I'd get new money and just put it in there, but I'd always regret it when the red days came because you'd be out of powder. So you don't want to do that. Geez, last time I checked, it was 3 something. You're saying it's almost 7% right now? That's awesome. Cool. Well, good thing I don't have to do anything to get that because I'm already staking. That's pretty awesome. It's a pity AlgoFi was not available in September. Yeah, for sure. I mean, better days are ahead, so it's not too big of a deal. I mean, we could say that about any of these apps that are coming, though. It's a pity they weren't here in the last bull market. It is what it is. I do agree, but can't do much about it. So what is the broader market like? So the equities market, and for those that don't care about stocks, I know it's a lot of you, most people are just invested in cryptocurrency. You do still have to be aware that 70% of the cryptocurrency trades that happen, or roughly, are by institutional investors, and institutional investors also partake in the equities market. In fact, they're probably more invested in the equities market because it's seen as a safer market. And a lot of these coins are correlated with the S&P 500. I know on the last stream, in fact, I could probably show it again somewhere. Let's see. I'll find it later. Either way, what I was getting at is Algorand in particular is like 81% correlated with the S&P 500, with the Russell 2000, and so forth. So, I mean, it's certainly an important thing to look at. And as of right now, we just crossed over into the fear range. Last week we were in greed. Last year we were in greed. Previous close, which means yesterday we were neutral. So we've been coming down. We were greed 7 days ago. We were neutral yesterday. We are in the fear zone, but barely now. But what does that really mean? You scroll down, you look at this chart, and we are right here. So as you can see, we could come down quite a bit in the fear range for sure. And it does look like, if you see right here, 20 seems to be a good bounce. We bounced right here off of 20, right here off of 20, right here just a little below 20, maybe around 19. And same thing back here in about 2019. We also bounced off the 20 zone. The only time we went below that was during the COVID dip, which I don't expect us to get to that much fear in the market because that was an unprecedented event. So I'm not considering these lows, although it's possible. I certainly have my eyes on this 20 range for sure. And the old adage, buy the fear, sell the greed. You want to be selling when others are greedy and buying when others are fearful. So this is a great level to be looking out for when this fear and greed index reaches or comes close to 20, because it doesn't always. As you can see right here, it hit like 24 and 24. But these are perfect reversal indicators for sure. And as you get up past 80, it's great to sell. If you sold right here past 80 or over here, you would have been raking in you would have been selling basically the top. I mean, maybe a couple days before, a couple days after, but certainly better than 10%, 20%, 30% down. So this is certainly a level to watch out for, and anyone that wants to check it out, you can just go to cnnmoney.com, Fear and Greed Index, really easy to watch out for. And there is also a cryptocurrency Fear and Greed Index, which is right here. The cryptocurrency markets have been much more fearful than the equities markets have been, that's for sure. Yeah, cookies, sure, we all love cookies. So the Fear and Greed is about 13 right now, which is super low for Bitcoin. And we've been in extreme fear for almost a month. Last month we were in fear. Last week we were in extreme fear. Yesterday, extreme fear. Now, extreme fear. It's been extreme fear for quite some time. And if you look at this chart, let's put it on the 1 year. We are almost at historic lows over the past 365 days. We're at 13, 11 or 13 right now. And we've only ever reached as low as 10. And if you had bought every time that it hit 10, when it was hitting 10 back here, that was in the May and June and July lows, and you would have been buying 29,000, 30,000 Bitcoin. And then if you were selling when the Fear and Greed Index got above 70, which the higher it is the more greedy it is. So if you were selling once it got above 70, you were selling the top around 65,000 and around 69,000. So these are great levels to look at. I personally have a dollar cost average strategy, and whenever things get below 40 or so, I really crank on the dollar cost averaging. When things get below 20, I try to double up my dollar cost average if I can. And when things get close to 10, I start unloading serious capital. Maybe 2 or 3 months ago, I had at one point, once I sold out of my Oculus position, I had about 45 to 50% USDC as a portfolio position, which some people would say it's crazy. But it's been amazing right now. I've been able, at this point, it's down to about 20% because I've just been dollar cost averaging super heavy along these super, super deep fear cuts because, could I be wrong? Could it go down some more? Of course it could, but it's certainly a much better time to buy now than it was, 3 or 4 weeks ago or back in November when the greed index was reading above 70. So certainly something to keep an eye out for. And if I go back to the charts right here, this middle indicator down here at the bottom is actually a fear and greed index overlay, which is pretty dope to have it right here. And you can kind of see it lining up. I'll move it up real quick. And then let me get rid of a couple things, make it easier on you. Let's see, we'll get rid of this. We'll get rid of this. Boom. And, as you can see right here, these big green lines was when this indicator reverses it for you. So the green lines are buy signals, which means the fear is high. These fear readings were when it was reading around 10 or 15. If you were buying right here, what was the price like? Almost perfect buy signals. And these big red blocks right here, pretty decent sell signals. Obviously, it's not perfect because you were getting these red blocks back here when Bitcoin was still, 14,000 on its way to 65,000. So if you started selling as soon as you saw the greed indicator flash greed, you would have been out substantial gains, which is part of the reason why I line it up with other indicators, those indicators that I showed you before. And when other indicators are flashing sell, along with there being a lot of greed in the market, I definitely take a lot of profits. There's no reason not to. My biggest trade of last year was Opal. I took so much profits from that, and I'm very glad I did. In fact, I have now the same position size I did then, but a much larger cash position because I cashed out and continued to buy the dip. It was amazing. What do we have? What do we have in the charts? We need regulation to clear it up. Hopefully, let's see. We need regulation to clear up. Hopefully, also the XRP SEC case finishes up soon. That could be bullish for the entire space. I completely agree. If that SEC case goes in XRP or Ripple's favor, that would be extremely bullish for the entire space. There's a lot of negativity towards Ripple. I don't have necessarily any opinions towards Ripple itself, but I do totally agree that in this particular case, Ripple does kind of represent the crypto ecosystem in general. So, what's good for XRP in this case is certainly good for the crypto community. So I do completely agree, and we do need regulation, but hopefully not heavy-handed regulation. And as much as all of us don't want regulation, I know there's a lot of, hands-off libertarians in the audience, and I respect that. I completely understand, but you do have to understand also that a lot of the people with big money, a lot of these institutions, need some sort of regulatory clarity if they want to start really putting, these cryptocurrencies, Bitcoin or Algorand or what have you, onto their balance sheets. They want to know that they are in regulatory compliance and they can do so without drastic fines or being shut down or what have you. So, some sort of light-handed regulatory clarity would be super nice, even if the regulation was basically absolutely nothing, but it was written into stone. It was just like continue as is, but actually written down. That would clear up a lot of things and institutions would be jumping on in. So regulatory clarity it would be super bullish. Even if the regulations weren't that great, it still would be probably bullish because, uncertainty is bad for the markets. And if institutions are uncertain about whether they can make certain investments for their companies or not, it's not going to be good for the market. So even if it's not the best regulation, if it brings certainty, that will be good for the markets. We've actually seen that before. There's been plenty of bad news that happens or bad regulations or what have you, and then the market rallies because there's certainty. There's no more speculation, for sure. So what else do I want to look at? What else do we want to look at? Oh, I gotta show this just because this man is the GOAT. That's my buddy Devin. Thanks, Devin. So what else we got going on? Let's see. Total value locked for Algorand is on the decline at $120 million. And that includes borrows. If I click off borrows, which is probably the appropriate thing to do, it brings it down to about $109 million. And I know this isn't exact because you can stake, you can stake your buy tokens on buying.com. I know they have a staking app out there. I know Smilecoin has a staking app, and those currently aren't tracked. I think Algos Stake just launched, and there's staking there as well. So DeFi Llama's a little bit behind. If any of those projects are listening, you should try to reach out to them because their Twitter's actually pretty responsive. I've had conversations with them. So, if anyone's listening and runs a project, just reach out to them because the wider community uses this. This is one of the best analytics pages for comparing the activity on different chains for sure. So yeah, if you run a project, reach out to them, make sure they're getting your data. What else we got? Oh, I want to do something really interesting. 1 second. Let's see. I usually use my phone a lot, so trading view on the desktop is just a little bit different. What do we got? Anyone in the chats want me to do anything particular? Look at anything particular? What do we have? That's why money value went down so much. But consider it's just a lot of algos in it. That just tanked. Yeah, for sure. That's true. Yeah. Tell that the headline. Does headline have any staking platforms or anything? Do they have a TVL? I don't know if they have any ways to lock up any sort of tokens into a DeFi platform. They're doing a lot of things. I mean, they just released some DAO tools, some voting tools, really all sorts of things. I really can't even keep up with it. I know I did an interview with them, with Aaron from Headline a couple weeks ago. And yeah, really, we probably didn't even scratch the surface on what Headline's been up to. Anyone that missed it, just check out my page. You'll see that I did that interview. Let's see. S10-year. All right, sorry about that. For some reason, I couldn't get the compare to work properly. So this is the 10-year bond yields. And as you can see, the 10-year bond yields, the chart literally looks exactly like the Bitcoin chart. It's pretty insane. The correlation to the 10-year is almost identical, which is kind of scary. And so to explain this a little bit, the 10-year yields, the 10-year treasury to be exact, the yields on it are conversely related to the price. So if the price of the 10-year treasury bond is going down, the yields are going up. And if the price is going up, the yields are going down. And at first glance, this doesn't make too much sense, but the more you think about it, it makes complete sense. As the price of the bonds are going down, the government needs to give, because what are treasury bonds? They're the government selling debt, essentially. And the government has to give a more attractive interest rate for those bond buyers to attract those bond buyers because the prices are going down for those bonds. So they have to make up for it with a higher rate. And when bond prices are going up, meaning there's a lot of demand for these bonds, the yields go down. And as you can see right here, on November 8th, this yield started going down almost exactly when Bitcoin did, which means the bond prices are going up, which means demand for these bonds are going up, which could be seen as a negative thing for risk on assets like cryptocurrencies and tech stocks, because when bond demand is up, that means investors are seeking safer investments, because treasury bonds are seen as the safest investment since they're backed completely by the government. Whether you believe they're the safest or not is certainly your opinion, but they have never defaulted yet. They certainly could. They've been printing a shit ton of money, so they certainly could default. But the overall market sees treasury bonds as one of the safest investments you can make. So if demand for the safest assets is going up, that's generally a bad sign for the rest of the market. So this is a great thing to watch. Hopefully the 10-year reverses soon, because I expect, if the 10-year reverses, as will Bitcoin, because, literally, you can't make this stuff up. This chart looks identical to Bitcoin. Let's see. Actually, you can see it. You can see it now. You see this orange line? It's almost perfect. There's this orange line mixed in between these candles. I just overlaid it. It's like kind of scary, actually, how much correlation there has been with Bitcoin to the 10-year. Obviously, slightly different price scales. This program just automatically merges it down a little bit, so the price scales are different. Obviously, Bitcoin's been moving, more wildly up and down, but the price swings itself are pretty much exact. It's kind of wild. What do we have going on? Listen to this couple minutes till you understand it. Let's see. If Bitcoin gets to 20K, do you think Algo could go to sub 30 cents? Sub 30 cents. Interesting. Let's see. All right. Oh, wow. You can actually see, I didn't realize it was still on, but you can actually see the correlation here with the 10-year and Algo as well. As the 10-year yield goes up, Algo goes up, and so forth. However, by this chart, it looks like Algo could see a retracement soon. Let me just take off this comparative thing real quick. Put that back in a log scale. I don't know. I'd like to think we've hit our bottom. Because we're lining up with a strong support that we made back in March of 2020 when we wicked all the way down to 9 cents, and have never gone below that yet. We're actually squeaking below it just a little bit right now, which is a little worrisome, but I guess not a big deal if it's just a wick. As of right now, it looks like a huge wick. And by the way, just so people know, when you're looking at candles, these wicks can tell you a lot of information. A wick essentially means people are buying or selling the top. A long wick on the bottom means people are buying the bottom. They're buying the dip. And a long wick on the top, as we see right here in November, and as we see right here back in February and so forth, these long wicks on the top are a sign that people are selling the top. This is usually a good sign that there's a shift in momentum ahead for sure. Obviously, it's not 100% of the time, but it is one of the many great indicators you can look at. And as you start learning these indicators, you start lining them up. And if a couple of them are flashing, buy or sell, you can feel a lot more confident about a trade, obviously, or position. Because I don't trade too much. I usually just get into positions and maybe get out of them months later down the line or years later down the line, depending on market conditions. But I do occasionally trade with like 5 or 10% of my portfolio. That being said, the question was 30 cents. And I kind of got off on a little tangent. Sorry about that. Let's see. I'm going to use what we call a Fibonacci retracement tool. And we're already below all the fib levels. I really think we could be seeing a bounce soon. But if Bitcoin does go insane, yeah, it is possible, I suppose. I would like to think that this support right here would hold. This support where we hit it as resistance back in February. I would think that would turn into support, which is around 50 cents. So that would be my next target. See, I have some support lines right here, one at 85 cents and another at 76 cents. And I'm hoping those hold. I'm hoping it doesn't even go to 76 cents, although I will buy. I'm hoping these hold, but if they don't, the next big line of support isn't until 50 cents. So I would be worried that if we do get below like 75 cents for an elongated period of time, that we might end up seeing 50 cents. But I don't think we'd go much lower than that unless it's like a wick, maybe like 1 day wick. But I don't think it would last too long, especially because people like me would be buying it up for sure. And I do not have that much money compared to how much some of these whales have in the market for sure. And I know I wouldn't be alone buying it up. If you look at on-chain data for Algorand, I mean, a lot of these whale wallets are either getting bigger or, there's a couple more whale wallets added every day. So they're not capitulating yet. I mean, most of them still exist. I mean, I'm sure some of them took some profits, but they're there and they will buy that dip if it does get that low. So to answer your question on that long-winded question, I don't think it'll get to 30 cents. And if it does, it will be bought up. Like, I have no doubt in my mind, it'll be bought up very, very quickly. It would probably go from 30 to about 70 cents in the matter of like a week, to be honest. Yeah, I think what you're meaning here, number one mistake in statistics, talking about causation. Yeah, correlation doesn't always mean causation for sure. And I know, especially going back to the 10-year, Bitcoin is heavily correlated to the 10-year currently, but it wasn't always. There are points where it is not correlated at all. So, it's certainly one not causing the other, but it's just something to look at because it makes intuitive sense that if bond yields are going down, that means the prices of these bonds are going up, which means people are buying the bonds. If people are buying bonds, there's only one reason there's higher demand for bonds, and that's because people think everything else is too risky, so they want to park their money somewhere. A lot of people don't want to just hold cash. Especially with inflation. And yeah, these bond yields aren't beating inflation, but they're better than no yields at all. So if there's demand for bond yields, it's usually a sign that people think the broader market's weak. So certainly not causation, but also something to keep an eye out for. I'd be buying so much. I'll put some stink bids in at 50. Definitely do. I'd honestly, just because of market psychology, I'd advise putting them at like 52 cents, because that's a strong support line. Everyone is probably trying to, maybe not everybody, but there's gonna be a lot of people with bids at 50 cents. So I've seen it time and time and again where the wick will go like right above a support line, and all those people that had those bids in at the support line don't get filled. So I always put mine in a little above, and sometimes I'm wrong. Sometimes I could have got a better fill, but I'd rather get the fill than not get the fill and be left whole, not holding the bag. What else? Anything else that anyone wants to cover? I like looking at this too. This brings you to the Bitcoin halving countdown. The next Bitcoin halving, by the average block generation time, is saying about May 5th, which that is based on current speed. If it goes on a lot of people think the block time is about 10 minutes. So if it goes by that, it'll be May 28th. So sometime in May, it's estimated to happen, May of 2024, that is. And let's see. What do we got? What do we have? So how soon before the Bitcoin halving does Bitcoin usually bottom? If we ignore the bottom that happened during the COVID flush, which I think we should. I mean, although it does exist, I think it was an anomaly that wouldn't have happened otherwise. I don't think we would have capitulated like that had there not been some black swan event like COVID. So the last halving was in May of 2020. And we bottomed 525 days before that halving. The halving before that was in July of 2016, and we bottomed 546 days. So about 20 days longer in that period than the one before. And obviously there's not much to measure from the other halving, so I'm not gonna do that. But we've got 546 days in the before this second halving. We've got 525 days before this third halving. So, maybe another 20 days will drop or so, because I do think we'll have shorter cycles, or maybe 40 days or something. We'll just say 40 days. So, let's go 480 days before. That would bring us to about January of 2023, just a couple months after my line here. My line here is actually drawn at 540 days. So if history repeats almost identically and has, 545, 525, then a good time to buy would likely be between November of 2022 and January of 2023. So in my opinion, it does kind of seem like we could totally be in a bear market and bleed until then, or get one more relief rally and maybe pop at the top of this upper trend line right here, and maybe pop at 80,000 or something like that, and then crash down. But I can't imagine that we're just going to have a bull run that extends through the halving, which could totally happen. We could have a crazy super cycle. But I'm playing it cautious. I am not going to go below 10 or 15% cash. I have about 20% cash as a portfolio position currently, and I'm going to keep it mostly that way. I'm going to buy a little bit more here and there. I am dollar cost averaging with my paychecks, which is a little bit different. Like I said, I'm not going to release my stable coins. I'm going to keep those in AlgoFi and in TinyMan, earning fees in the liquidity pools and earning rewards staking. So I'm just going to keep growing my stable coin position. I'm going to keep putting my biweekly paychecks into Algorand mostly. In fact, I've increased my dollar cost average as much as I could. I'm just pretty much budgeting for my bills and then literally everything else besides, a little bit of food. But I also, one of my jobs is with food, so I get to eat a lot of free food. I'm not too worried about that. So literally like half my checks are going into Algorand right now, because the fear is so great. And, these prices are great. Yeah, the algo price is what right now? Let's look. It's what, like 80 cents, something stupid like that? What is it? 97 cents now. Nice. Did anyone in my audience buy at 80 cents? Because, geez, that would have been great. I was at work when this was happening, so I unfortunately didn't get the bottom. I did buy around, I don't know, something like 91 cents or something stupid like that. 97, up a bit. Yeah. Personally, not even sure about cycles anymore. Yeah, I understand that too, Father Algo. Personally, not even sure about cycles anymore. According to Willy Woo, predicted Q2 2021, BTC will do drunken dance, blah, blah, blah. The old cycles won't apply any longer because the market's changed a lot. Sorry. I've been congested for like a week, for like a month, honestly. It's kind of the strangest thing. But anyway, yeah, I do agree that cycles won't matter too much, but I also don't think that the halving will be unimportant, because it still creates a supply shock for Bitcoin. Now, I do think there's a chance that Bitcoin eventually becomes irrelevant, and so then those halving dates become irrelevant, because there is better technology out there. And I know there's a lot of Bitcoin maxis that are going to hate me for saying that, but there is a lot of better technology. So, I mean, there's a chance Bitcoin itself doesn't become that relevant, but if it stays relevant and it stays the number one liquid asset in the market, then those halving dates, in my opinion, will still be important dates to consider, because it creates such a supply shock in the most liquid and valuable asset in the space. So, whether it should be the most liquid and valuable asset in the space is certainly up for debate. But how do you find the time to stay updated the way you do and still work? I find it a struggle to stay involved in the markets and work so many hours and be a dad. Well, that's the thing you just mentioned. The very last thing you mentioned, being a dad, is probably the number one reason that you struggle to do that. I'm in a position where I do not have any children, so I don't have that taking up my time. I'm not, married or anything like that. So I'm a single guy with no kids. I do work multiple jobs. I actually have a job at a hospital. I'm a realtor. I do YouTube. I, invest and all that jazz and try to stay up to date as much as I can. And I guess the real answer to the question is I do not sleep as well as I should. That's for sure. And I love it, honestly. I really do. I really do enjoy analyzing all of this. That's part of the reason I've made quite an effort to try to kind of turn it into my side gig, because I was like, I've spent so many years paying attention to all this stuff anyway, and ranting to my friends that didn't want to hear it anymore. So I figured, why not start a YouTube page, get involved into the blockchain ecosystem and so forth. I enjoy what I do. I mean, I'd rather spend the time researching or looking at charts than watching like cartoons or a movie or something. So yeah, that's just where my head's at currently. Plus I have certain goals, I have a few goals that I'm trying to hit by 2025. So I'm trying not to slack off on them for sure. Exact JT telling the truth right now. People are going to wake up and realize BTC isn't the top tech in this market. And others offer way more for a cheaper price, for sure. The only thing I will say that Bitcoin has going for it is the fact that it has still proven itself to be the most secure blockchain. However, I mean, part of that just has to do with time. There's a very good chance Algorand could be the more secure blockchain, but when you're using the metrics, it's like Bitcoin was created in what, 2011 or something like that was the first time Bitcoin was mined. I'm not exactly sure. Maybe it was 2010, but that's 12 years of a blockchain, or 11 years of a blockchain having no security flaws. So they can point to that and say, hey, it's a very secure blockchain. So it does have that going for it. It also has the fact that there was no investors that got private sales, so there weren't any like whales that bought 70% of the supply before it even went public. So it was much more fair distribution in the beginning. I wouldn't say that now, because obviously the early miners and the early investors are certainly disproportionate to the rest of us, but at least in the beginning, I do think it had probably the fairest distribution. But granted, the market was smaller, so that community that knew about it was also small. But there are also a few benefits to proof of work. But yeah, ultimately, I don't think it'll go away, but it definitely shouldn't be number one. I could see it maybe as a number 5 or number 10 asset, because there are some important properties that Bitcoin has. However, I will say, for anyone that does think there are some advantages to proof of work to proof of stake, which there certainly are, and there are many advantages of proof of stake to proof of work. I mean, there are pros and cons of everything, and you have to look at everything at face value for sure, and see the good and bad in everything. So for people that do like proof of work chains, because there's a lot of Bitcoin maximalists that tout that, in my opinion, I think Monero, or XMR as a ticker symbol, should be vastly ahead of Bitcoin. It's a far superior proof of work chain. It's relatively old. Maybe it was made in 2013, 2014, and it's the most private cryptocurrency out there. It's essentially digital cash. You cannot track Monero. The government's been trying to, pay people to hack Monero for years unsuccessfully. And they just announced atomic swaps. So now you can do atomic swaps from Bitcoin to Monero and vice versa, which is great because a lot of regulation has been cracking down on these privacy coins. And so exchanges aren't listing some of these privacy coins, which I think is a shame, because as we become a much more digital and cashless society, I do think we will need a digital currency that takes the place of cash, so you can go about your life and not have every transaction public on a blockchain. Like, people want to buy private things. I love public ledgers, but there's also things I buy that I don't want people to know about. I mean, what if I wanted to, donate to a certain political group and didn't want people to know about it, or anything, what I mean? There are reasons why people want private transactions for sure. So I think there's a place for that. It's great tech, but somehow gaining little attention. XMR is big disappointment in price. Yeah, I agree. And I do think that's part of why, what I said, where a lot of these exchanges just don't want to list them So there's just not a lot of hype around them. There's a lot of fear around owning them. Excuse me, sorry. So yeah, I just do think that there's certainly a lot of fear in listing and holding these coins, which is a shame, honestly, because Monero was probably one of the first coins I bought in 2017. JT, what is your favorite way to maximize your algos? Oh man, there's so many different ways to maximize your algos. Let's take a look at Tinyman real quick. So I like providing liquidity. I know not everyone does because there was a hack that affected liquidity providers a lot. But if you go down to Tinyman, you can see these APYs. They're trailing 7-day APY, and I think they're probably not. I don't want to say accurate, but not 100% like what you'll be getting in the future, because I think there's been wild swings because Tinyman just launched. So there was a lot of price fluctuations and trades that have been pent up for weeks that kind of happened. So I do expect these APYs to come down a little bit, but you can find like all of these different pools that you can supply liquidity to. And if you do that, you should go and learn about impermanent loss, because you certainly can supply liquidity, especially to volatile pairs, and suffer from what is called impermanent loss. It's not entirely a big deal because you're still making money. You're earning this APY. You're earning the fees that, you're earning a percentage of the fees that are had through the liquidity pools. But, your percentage, so say you had, just for example, say you had 100 algo and 50, ABC token, but ABC token was in high demand, so they started buying, and you supplied those to liquidity. So you supplied 100 algo and 50 ABC, and then ABC was popping off. So people were buying it. Your ABC pool would shrink, and your algo would increase. So your percentage of that liquidity pool, you'd have more algo than when you started and less ABC token when you started. And if the price of ABC token is 4x, you would have missed out on potential gains had you just held onto those tokens. But there is also a caveat, which is if there isn't liquidity, those tokens aren't going to go to the moon. So somebody has to be providing the liquidity. So to me, that's a great way. I personally stick to stablecoin liquidity pools. I'm in the stable USDC pool, and you can also, a low risk one, I mean, it certainly still is risk, but a low risk one is the Algo USDC pool, which is currently earning 236% on a trailing 7-day APY, which is pretty nuts, honestly. Or you could safely you could safely get 20% right here through the stable and USDC pair. And I say safely mostly because you're not going to really suffer from impermanent loss with stable coins, just because both assets aren't really volatile. But yeah, that's certainly one of my ways. Another way is obviously, even though there's some tensions, I suppose, is, staking it on Yieldly Finance is like 7 to 10%. And honestly, what I've been doing is staking some of my algo on Yieldly and obviously all my Yieldly on Yieldly, and pretty much every day or every other day, whenever I have time, I claim my rewards and I swap those back for Algorand and use that Algorand to pay back a loan that I have on AlgoFi, because I took out a loan, I don't know, quite some time ago. In fact, I leveraged up my Yieldly position like a couple weeks before all the shenanigans happened. I've since deleveraged, but I still owe a little bit on AlgoFi. What do we got going on here? As more corporations demonstrate the ability to tokenize on Algorand, it will continue to evolve. Grower, not a shower. Yes, yep, Doughboy. I certainly agree. Not a shower right now, but Algorand will definitely be the grower. That's hilarious. Yeah, I completely agree. As somebody made a great point. I forget who, where I was reading it, but somebody made a great point about how this bear market is actually going to be a great catalyst for a lot of these better technology blockchain smart contract platforms. Sorry, I was losing my train of thought. And what I mean by that is, if ETH investors or ETH holders or people participating in the Ethereum ecosystem have just lost 30 or 40, 50% of their value over the course of last week, those $50, $100, $200 transaction fees are going to hurt a lot more. And people are going to be looking for cheaper chains. And first, they're going to flock, unfortunately, to the Ethereum L2s because, that's what they're used to. And then once those L2s start to feel the same pressure that Ethereum felt, they're also going to realize again that they're getting hit with those bad fees because those L2s, and a lot of people criticize Algorand for not being EVM compatible and creating their own AVM, but the issue is these L2s will have the same issues Ethereum had because they're running on the EVM. They're Ethereum virtual machine compatible, which means they're going to have the same limitations, at least from the smart contract capabilities, as Ethereum does with the EVM. And as that happens, then those people are going to shift over to other smart contract platforms like Algorand, maybe Solana, maybe Elrond, and their great rotation will be had. And I think we're going to see that currently. I mean, I think it's probably already happening. People are probably fleeing Ethereum because those $200, $300 gas fees they can't afford anymore now that their portfolio is down 50%. So they're going to look, maybe at AVAX or Matic or something, and then they'll eventually realize similar issues. That's really not solving a great problem. And then that migration will happen to Algorand, to Solana, to Elrond, and it'll be the battle of the better L1s at that point. And I do think the next bull run, whether it happens, this year, next year, or it is a 4-year cycle and the next bull run doesn't happen until 2024, I do think the next run will be Algorand's run. Much like this one, all eyes were on Solana. I think the next time we are in a true bull market, all eyes are going to be on Algorand, especially because by the time the next bull phase happens, Algorand is going to have a much more robust ecosystem. It's going to be much more appealing to the broader market. So I look forward to it, and that's also why you shouldn't be afraid of these prices. Certainly we could come down another 10, 20, 30, 40%, and obviously that sucks. But if you believe, as I do, that these, that Algorand in particular, but blockchain in general is going to be a force to be reckoned with, then you should have no issues buying right now. I mean, yeah, you could kick yourself in the ass because, tomorrow you could have had a better entry, but who cares if you're buying Algorand at 90 cents or today, and you could have bought it at 60 cents tomorrow, but like, who cares if you're buying at 90 cents or 60 cents if you think it's going to be $20, $50, $100? Are you really going to look back and be like, man, I really wish I got in at 60 cents when it's at 50? Like, no, you're going to be happy that you got in at $1 or $1.20 or $2 even if you bought the top and have been riding it down or what have you. So I wouldn't be too stressed out for sure. EVM versus AVM is just a technical issue. Retails don't care about that. Only devs do. I agree. Before I read the rest of that, I do agree. And I'm not saying retail is going to care about, the virtual machine they're using. They won't even know. Most of them won't even know that EVM or AVM exists. They're just going to realize that they're suffering the same problems. And those same problems are going to be because of the EVM. Whether they know that or not is not really the case. It's just the fact that once they migrate to those other EVM compatible chains, they're going to end up with the same issues and eventually find their ways to chains like Algorand. And yeah, it won't be because of the virtual machine. They'll have no idea about it. It'll be because of the problems that they're experiencing for sure. Should we see at least a dozen more high yield generators on Algorand? Retails would come if they learn about. I do agree about that. I also think a lot of that is coming. I think a lot of what holds Algorand back is the fact that it doesn't have that robust of an ecosystem yet. There aren't many projects on it, and that is actually partially because of the AVM. A lot of these other chains have just been able to become EVM compatible, which means a lot of those Ethereum developers can just port their apps right over to those other chains. Super easy, which you can't do that with Algorand. But I do think long term that's for the benefit because there's a lot of issues that the EVM has that the AVM currently does not have. Thoughts on the Bloomberg news article concerning the White House? Let's see, show. Why won't that show? There we go, sorry. Thoughts on the Bloomberg News article concerning the White House crypto executive order coming in February. When was this released? Was this today? I didn't see too much about. I don't know if I know exactly what you're speaking of. I know recently, the Fed gave a talk and they're doing like a whole bunch of stuff considering the digital dollar, and they also had mentioned that stablecoins could exist alongside a digital dollar. But yeah, I don't know what you're talking about, to be honest. EVM compatibility could only be interesting in order to very rapidly increase the ecosystem. Yeah, I agree. I mean, some people have considered maybe like adding like an Algorand like L2 that is EVM compatible, but yeah, I don't necessarily think that's necessary. I do agree that if it was EVM compatible, it would definitely speed up the ecosystem growth that is inevitably coming anyway. So I guess it's not really that big of a deal, especially if we're entering a bear market. It's really not a big deal if things slowly pop up during the bear market. It was yesterday and just about learning. No action. Any thoughts on algo phase? I don't know much about algo phase. Let me take a look at it. Algo phase. Yeah, going back to the point of oh, actually, no, I did see a picture of this now that I'm seeing the symbol. But going back to that other point when I was like, I don't really know about this. That goes back to the point that I don't do a great job keeping up with things. People are constantly like, what about this? What about that? And sometimes I know nothing about it, to be honest, but I don't venture too deep into the ASAs. I mean, obviously, I knew about DeFi just because I really wanted to get into a pre-sale. A lot of pre-sales are closed for U.S. investors. I thought it was a great project, and it was open for U.S. investors, which I'm not even sure why some can and some can't, but either way, it was one of the first, I think it might have been the first Algorand project that I could buy in pre-sale without any restrictions. So that's partially why I did it. I also thought it was a good project, but of course I was taking a risk. But algo phase, your question was about algo phase. I did see a couple people comment that they thought it looked a little fishy, like a little suspicious, getting like scam vibes from it. I have no comment about that. I just wanted to put it out there that there are people that think that. I have no idea really why they think that. But I don't know. I don't know the team behind it. I've never seen anybody announce like that they were funding it or anything like that. At least with DeFi, Sean Lee, the CEO of the Algo Foundation, had said that DeFi was part of their pipeline. So that at least gave a little bit of credibility that, it doesn't mean it's going to be a great project, that, but at least gives them credibility that they're not just like some random group of people that are popping up to take your money. Yeah, no, it looks great. I saw these pictures, it looks great. If it's legit and they pop out some sort of app like this, that has its own DEX, unlike DeFi that's actually just like a router. It's not really a DEX, which I think is great too, because if you already have a bunch of DEXs, you don't need more. Routers are perfectly fine. And actually, I like the idea of a router because then you can route trades to the best DEX available. But yeah, of course, more applications on Algorand would be great, and more apps, more phone apps would be great. So if this is legit, I completely welcome it. It would be certainly a welcomed addition. I think phone apps are super important. Like, I know a lot of us use all of these apps like Yieldly and Tinyman and Algofy and stuff, but they're web-based apps. A lot of people want to just hit an app on their phone and trade or borrow or loan or stake or whatever just through a nice little app. I mean, I don't really know why. There's not too much of a difference. It's not too hard to open up the browser, but it certainly is true that a phone app would create much more adoption. There's a reason why Coinbase has a phone app and not just like a web application that they let people open up their browser and go to. I mean, you can do that, but who is doing that? Everyone's using the app. Let's see. Let's see. Yeah, I agree, Doughboy. I think yeah, yeah, no, I agree. The chains with relevance, they're going to work them. It's going to work themselves out, and the chains with relevance will be the ones that come on top. I actually, even though it hurts right now, and a lot of people don't want to be dealing with a bear market, which we might not be in. Honestly, we really might not be in a bear market. It could very well bounce. There's a couple indicators on the daily that are suggesting we could see a bounce soon. However, it could just be a relief rally that bounces and then continues the downtrend. But yeah, in some sense, a bear market could be kind of exciting because it's going to flush out all of the, for lack of a better word, it's going to flush out all of the bullshit projects. It's going to flush out all of the meme coins. It's going to flush out all of the scam tokens that really weren't in it for, for the long run. So I'm excited to see what survives a bear market because, for those of us that have been around since 2017, the top 10 or top 20 tokens looked very different than they do now. There's a lot of tokens that were in the top 20 that aren't even in the top 50 anymore. And some that are just completely gone in general. There's no activity on them whatsoever. So, I think that will ultimately be good for Algorand, especially, as a lot of these bullshit projects get flushed from the market, all these meme coins, all these scam coins, all these useless coins that have no utility whatsoever get flushed from the market during the same time period that the Algorand ecosystem is building and growing and getting more dApps and becoming more interesting and becoming more revolutionary. It will come out the other side a big winner, which is part of the reason I suspect the next bull run is going to be Algorand's bull run. It is going to be everyone talking about Algorand versus everyone how they were talking about Solana in 2020 and 2021 for sure. Hey, crypto for change. You should have joined No Bear Market. We could have debated it. I know you had some friends over. I need some green. Yeah, should I? Hold on. I got you. Hold on. Yeah, there we go. We got some green for you. Hold on, I've got a little bit more green for you if my phone doesn't die. No, my phone died. I was gonna change the lights. They're attached to the phone, but I can't. Phone just died. Can devs do something? Yep, we're going back to red. The devs just did something very bad. Very bad. Sorry, Padre Algo. Yeah, no bear market is a joke. Yep. No, I agree. I mean, we'll put the bull market vibes back up, and let's look at the charts one last time, and then I'm gonna get out of here, guys. Let's see. I do want to show the one-day chart for Algorand real quick. So just bear with me, and then we'll all be on our merry way. I do have to add these indicators back that I had before, though. Let's see, indicators, RSI. So I use the RSI, which is the Relative Strength Index. Let's see, and then also indicators. And the MACD, the Moving Average Convergence Divergence. And if you can see right here on the MACD, in May of 2021, we hit a low right here. And you can see momentum change when they cross. So when these two lines cross downwards down here, going up, so the orange is now on the bottom and the blue is on the top, this is usually a sign of reversal. And same thing vice versa, up here, this cross right here is a perfect sell signal. The orange goes from the underneath to now the top. Perfect sell signal right here, perfect buy signal right here. And if you throw in one of these horizontal lines right here, you have, let's change the color of this because this should be a buy signal. Right now, you have the MACD, or at least this first line, this blue line, hitting exactly the low point that we hit back in May. So could we bounce off of it like we did in May? We certainly could. Does that mean we're going to? Not necessarily, but it could be a certainly strong indicator of support. Let's see. Another thing I am looking at is this right here. If Algo can break above this trend line, which it did barely, it broke up above it at the end of December and then came crashing down. I thought it was going to test it and be off to the races, but why is that important? You can see these trend breaks. You know, you can see this right here. Whoops, Jesus Christ, why wouldn't that stay? Boom. Now, pair this up with the price. You see this RSI on a downtrend, on a downtrend, on a downtrend, and where did it break? It got back above this downtrend resistance line right here, right when the market bottomed. This was like the exact pivot point in the price. So that's part of the reason why this resistance line in the RSI is completely important for us to get back above. And you can see that over and over again. You can see, you know, right here on this downtrend. You should see it right here. Boom. As soon as we got back up over this resistance line in the RSI, that was the exact pivot point of the of the price back in November of 2020, after it crashed from 73 cents all the way down to 24 cents. So these are just things that I'm looking for. It certainly looks like we're getting close to bouncing. If we bounced off these RSI levels and get back above and come down and retest it as support, and then off to the races, I think we could have at least a couple months. And as you can see here, I have some targets in place for price targets, and you can see here I've got likely, less likely, and almost impossible written right there. And let's see. I was trying to figure out what this white line is for. I think it's just an extra white line. Yeah. So here are my price targets if we are not in a bear market, if we bounce and continue this bull market structure, which we totally could because we are still in an uptrend. As you can still see here in this bottom green line, we are holding the lowest level of support in this uptrend. And if we continue to do so, the overall bull market is not over and the trend is up. If we do break it, then I would be worried because we would have just broke a 2.5 year upward trend. If we continue to hold this 2.5 year upward trend, which it could be very likely, then for me, depending on when we hit it, my initial price targets for Algorand are anywhere from $5 to $12. That's likely. Less likely would be anywhere from about $12 to $53, and then almost impossible is 44 to 234. And I don't mean forever. I do think we'll hit $50, $100 by like 2025, maybe 2028. Around further down the future, maybe even sooner than that. But I do not expect it to hit this green box in 2022 whatsoever. I think these two first boxes, much more likely and less likely. And like I said, that ranges anywhere from 5 to really about 45, 50. But like I said, I really don't expect 50. I'd really expect my targets are 5 to 12. If I'm off a little bit, really like 20 to 40. But my eyes are set on 5 to 12. But that's if we are not in a bear market, which we totally could be. So with that being said, build up that cash position, dollar cost average, don't panic sell, don't trade on leverage, because these leveraged positions are the reason why things tank so hard. Look at how hard Algorand tanked right there. I mean, this quick flash right there are leveraged traders getting liquidated and people with stop losses getting those stop losses hit. So it's a combination factor of bots that are selling because of these indicators being hit, leverage traders getting flushed out, stop losses being hit, and then a dirty cycle of that, cycling, a nice circle of that, that kind of snowballs into this crazy downswing that we had. So, we're going to close this off with don't fear. I think Algorand is still a $100 asset in the next 5-7 years. We could see some further downtrend from here. I think we might bounce off of it. I'm not convinced it's going to be anything more than a relief rally yet. I'd like to see these coins get back above their 200-day moving average. A lot of them are below their 200-day moving average, and I'd like to see them get above it. But that being said, yeah, definitely dollar cost average or sit on your hands and do nothing. I would not advise panic selling unless you're a good trader. If you've successfully traded multiple times, don't let me tell you not to do it, for sure. 100%. If you think you can make a couple good trades, certainly be my guest. But for the average person, dollar cost averaging is your friend, and dollar cost averaging when fear is high is your friend. You want a dollar cost average into the market when there's a lot of fear into the market, and you want a dollar cost average out of the market when there's a lot of greed in the market. So that being said, there's a lot of fear in the market, so go dollar cost average, and we will catch you in the next video. If you liked it, if you stayed to the end, I appreciate it. We went a little long here, an hour and 15 minutes, but I was just making up for being about 20 minutes late. If you liked it, smash the thumbs up button, please. Consider subscribing, trying to get this channel to 1,000 so I can potentially monetize the channel and do this more often than I work at the hospital, because I'd love to do that. Honestly, that job kind of sucks, but they pay well. So that is what it is, but I appreciate all of you, and I will catch you. Oh, hold on. What are these things? What are your thoughts on people saying algo stake is going to be better than yieldy? Just because it's a new thing. It's possible, but I think they're wrong. Algo stake doesn't have much going on for it. It's very early for the project, so I can't judge it based on that. But at least as of right now, if Algo stake is just a staking platform, which as far as I know it is, and you can only stake 2 coins on there currently, yeah, I don't think it has much competition. Yieldy's trying to become a launchpad. We'll see if they do that. If they do that, that'll be huge. The NFT marketplace, they are making one on Algorand. I know a lot of us are not happy with their moves with Polygon, but that's a whole different topic. Yieldy, even if we agree with some of their decisions or not, is much more useful in its current representation than Algo stake. So I don't want to say that Algo stake can't become better than Yieldy. It certainly could. They could have a great dev team, a great vision. It certainly could become better than Yieldy. As it stands right now, I'm not putting my money in that. I worry about people jumping to it and the site getting hacked and funds stolen. Yeah, I agree. I mean, you also have to be people also have to be careful with what they're connecting their wallet to, because there can be fishy things that happen to your funds just by connecting your wallet to a bad app. So definitely, you think you're being safe by not depositing money into it, or only depositing a little bit, but if you're giving it access to your wallet and connecting your wallet to certain apps, that is a risk in and of itself. So certainly be careful, and certainly try to know what you're participating in, for sure. All right. Yeah, thanks everyone. I appreciate everyone staying until the end. And as I said, if you haven't done so already, like and subscribe, and we will catch you in the next video. Thanks guys. Peace out.